Hello, Warriors. Dale Pinkert here with TradeGATEHub.com. How are you? Let's see something. Here am I. Here am I. Okay. So if you've been following me for a while, go back on any videos over the last 4 months. I had conviction for, going back to the beginning of 22, even back here, that we'd end up with a third drive in US dollar yen. Never turned bearish throughout it. It looked incomplete all the way. Now we're having what's called a throwover of a wedge line. And, there are some reasons, especially since there are some cyclical highs due in Japan around fiscal year end, which is around the end of the month. Also, we have some turning points coming up with the change of seasons. So my work is starting to look for a potential high in US dollar yen. It's definitely correlated fairly well with the 10-year yield gapping up today into the Fed. And keep that in mind. For example, if you took my idea of shorting the Aussie on a retrace, which was perfect, 61.8, I said, sell it at 62, posted in the room at 52, and booking some profits here in front of the Fed on Aussie. Aussie looks vulnerable to me, and my rationale was what happened in commodities with copper. And, why can't copper still be in a bull market and pull all the way back to 325? And that's a pretty good hit from here. That's about 30%. And it was the first one to turn. And perhaps this bull move in gold might have terminated up here, and silver as well got to 27. I like that there are some 200-day, 50-day moving averages converging around 24. I'm pretty sure silver will be bought down here. If I was bullish, you could almost call it a breakout line, this moving average. Look how it hit on this peak and on this peak. And once we closed above it, we had open air. So I'm pretty sure there'll be some type of trade, whether it turns out to be a break to buy that's going to lead to new highs, or just a bounce and eventually under 24. If I was bullish silver, if I'm long silver long term, I wouldn't want to see silver close back under this level. So keep an eye on that 24 level. That would end up kind of negating it, making it look completely like a false breakout. So, we had a lot of having a lot of false breakouts, false breakdowns. Last week, I talked about the potential of a huge move in euro pound and that it would outperform the euro. And when you look at last week in euro pound, it's one of the biggest weekly candles. And what's interesting about it is it took out, I forgot who it was in TradeGATEHub that was looking for these lows to be taken out before a bottom came in, but definitely a false breakdown, and shorts are stuck. You have to look for any kind of pullback to buy, to me. And euro pound, anywhere back, start like about 83.20 down to 82.80, risking the lows of the move. But this is a pretty powerful signal. Now we're in a consolidation phase. So, this was over 200 pips, that a continuation move could take us up to the 87 level. And that's not anything more than a correction from the huge move that we had to the downside. So like buying breaks here, if we get a break after the Fed, the dollar pops after the Fed, and that's not guaranteed. Buy breaks in euro pound is the bottom line. So the euro tried to close back over this 110.40, like we're having that throw over in yen right now that I showed you, where we're accelerating through a wedge line here. This is also what the euro did a couple of weeks ago. It made one attempt and closed back above it. And when I was with you Wednesday, I said, I'm getting out of it. I even got out early at about 10:40 and it rallied to 11. But I wanted to be out because I was expecting a hot CPI number, which we got. And I look at this now, and this was a pretty deep retracement after the CPI. We've held the 61.8 level. And if we say, for example, the dollar pops one more time, it's pretty close to these highs, 99.40. Otherwise, we're talking double top. And the euro is able to hold prior lows, perhaps at the 78.6 level. If they sell the dollar off, I may probe the euro here at the 108.70 level, being wrong under the low of the move. One thing that gives me pause on my RSI work is that this low in the dollar was confirmed on the daily. Should we get some type of probe, maybe a stop hunt towards 107.5, 107.80, this time the euro will most likely be above 30. And you still can't ignore the weekly divergence that we have in the euro right here. But if it's between the two, and you always want to be long the relative strength rather than the relative weakness, it's euro pound. To me, this low looks like it could stand for quite some time, and maybe it's going to be a major low in euro pound, and we get something like this. So there's a lot of central bank action. It's not just us this week. I believe it's the BOE also has a Fed meeting. I think the BOJ does too. So the pound, it has now reached targets that I talked about quite some time ago. In fact, I said that on this last rally in the dollar, that's why I was looking for lows in EG, that the pound was going to be weaker and clean out these lows before we could look for a more solid bottom. We could be developing one here, but when you look at the two charts now, which one looks better? Okay, keep an eye at the same rules apply that applied last week to declare a bottom in Euro USD. If you're not like me and you're smart and wait for confirmations on a move, you'll wait for a 1045 close, 1050 close, a close similar to this. And also the 2-week off number is 109.30. So by Friday, you want it to close over 109.30. The Aussie, it looks pretty negative to me. That's a nice failing rally. I know some people want to buy it at 72. You know, I'm more bearish Aussie than I am cable or euro. I think that what's happening is pretty close to a frenzy in commodities when they have to close the LME, a nickel contract, cancel trades. I'm not saying that the fundamentals aren't, that we're in the shortage of everything type mode of markets, but it has become very, well embraced how commodities have performed since the war. It wasn't as embraced prior. So this is really, a lot of people used to call it more of a risk off type of currency, but you have to pay attention to what's happening in copper with the Aussie. Look at that, and then look at Aussie. And you have to pay attention to what's happening in China. And China still has a zero tolerance policy for COVID, and their cases have tripled in the last few days, and they're shutting down different parts of the country. That's not bullish Aussie. So Aussie's become my preferred short, and my preferred long is looking for spots in pound and cable, the European currencies against the dollar. And wouldn't mind seeing the dollar make one more new high without it being euro-led. Euro puts in a higher low, and you know what a big percentage of the Dixie it is. So that would show pretty good strength by the euro if it didn't make new lows, and we're still 120 pips off that low. My trader intuition tells me look to buy a break after the Fed and fade dollar strength. So that's the way I'm looking at those markets. I'm not short the gold. I wouldn't buy the gold here yet either. This 1880 level is going to be pretty important. It's possible that we have a bear move in gold. No one will say it. Everyone loves gold, 95% gold. But, when you look at the silver as well, I know it had a nice run. But when you break out your telescope, What's so great about that chart? Yes, it could be coming out of a base, and we'll see how it acts. Here's that 24 level again, right, that I was talking about on the daily. So we'll see what happens there. But I could see a flush still happening here in silver. So we'll see what the nature is of the pullback. This was one heck of a move. I'm not discounting this move. It was huge. It was a great wave to catch, but you know what? Surfers that are in great waves, they get off the wave when the ride's over. And also great surfers don't try and catch every wave. They too wait for the right setup to attack it and get on the board. So be patient now with the Fed being here. Should have been able to, been aggressive last week. This whole war scenario, trading around this war, is, kind of sickening. Sometimes I feel like Bobby Axelrod on the show Billionaire, who made his fortune shorting airline stocks on 9/11. So anyway, yeah, just my sensitivity to the tragedy that we're looking at there. Gold silver ratio has been moving sideways for a while, and this is pretty important. If we're going to get one more thrust up in this gold silver ratio, it means that silver is going to be the weak sister. So have your stops in underneath the market. You never go broke taking profits. You've had nice runs in precious metals. Let's look at the S&P. So here's the picture in the S&P. This is the way I see it right now. It looks like a falling wedge. It's respected, different technical levels, but something is missing here. And people that follow me, people in the room, what do you see that's missing from this formation? Anyone? To make it complete? You're right. A third drive. So potentially this is a falling wedge. If we're going to test the downside, just like this low cleaned out this low, one more low clean out this. If the RSI stays over 30, this might be the swoosh. Although I know guys looking for lower numbers, 3,800 seems to be a big number that a lot of people are talking about. So that would mean we'd get another throwover. But if we attack this, and I know some technicians are looking for a bear market rally back to 45 or so. And I think if we get back through this trend line, there's compression building in here. So there's going to be a big move if we come out of this wedge. And that's going to come in the next several days, about 4,400, back above these highs. NASDAQ is, acting weaker. It almost made a new low. It's not going to take much to put in a third drive down here. We could do it into the Fed. If I put my trader intuition hat on, I'd be looking to buy new lows on a third drive in the S&Ps. If the Fed goes 50 and freaks out the market, I might try longs here, contrarian trades here. Okay, moving on to the crude oil market. Pretty negative week we had last week. We're getting follow through today. I've talked about this being a potential head and shoulders top. Right now, it looks like you have a little breakdown here. We'll see what happens around 97. But if you take this whole measured move here in crude, we'll call it 104 to, call it 25 bucks under 103 closes, measures 80, which happens to be, I know, where a lot of people have their fundamental floor, and also happens to be where I had this breakout speed line coming in down at 80. It looks like it, that would be impossible under current war conditions and, banning Russian oil. But to me, that doesn't look negative. It looks more negative than the gold, but not as negative as the copper. So the forecast last week of commodities cooling off doesn't mean that the dollar can't be peaking at the same time. So just as we had a strong dollar and strong gold prices, we could have a weaker dollar and weaker gold prices, at least for a stage. So keep that in mind. Try and be flat before the Fed announcement, and definitely before the presser, or have very, small, being small for the Fed. I think they're going to go a quarter. We'll see. I don't know. I can't predict it. I'm not going to play roulette into it. I'm going to react to the reaction. But my bias is to sell strength in the dollar and to buy weakness in equities. And you know what? Possibly even look for a long with yields, even though yields are at new highs up here. We are diverging. These are marginal new highs. See the non-confirmation here. So, we could be getting close to a place where there might be a decent buy if commodity prices are going to come off, especially oil come off, where you could get a nice little counter trend move in the bond market. I mean, no one likes bonds. And you know what? Everyone hates stocks now. So I know sentiment is not the only reason to, commit and take risk, but very hard to find, someone. In fact, I've asked people, give me a bullish narrative for why someone should buy stocks. And most people can't come up with a reason. They say, well, maybe a ceasefire resolution of the war in Ukraine, the Fed being more dovish. Maybe they talk more dovish after this. I think that would actually freak out the market. So if there aren't many bulls now, and I remember one of our guests, Helene, was already saying if we had one more low, and that was back here, that, everyone was already bearish, right? That was before this bounce that we had when David was on the air. So I would assume with the war escalating, and this was before the war, that the market's even more bearish and negative now. There's talks of funds being in trouble. There have to be funds in trouble with what's happening with the LME. There's talk of Russians missing an interest rate payment, potential default. No one could give me an answer about that. Kramer, Mike posted some great stuff in the room, was talking about some funds are in trouble because people want redemptions, so that they have to liquidate to pay off redemption. So, most of the background news is pretty bearish. I don't hear too many people except some of the long-term guys saying, yeah, if you get long here, you'll be okay by the end of the year. Well, I don't know if I'm going to be here at the end of the year, but I do plan on being here for after the Fed, and this is one of my ideas. So everyone, hope you took a piece of this Aussie. Just keep in mind that, all the euro took care of business. Maybe it needs to do it again by, cleaning out many lows. If you've been following me here on TradeGATEHub, I never turned positive on the euro, going all the way back to here and here. And then this is when I started turning positive right before the throwover. And I still think an important low is setting up here. I never turned negative the yen and said that we were going to move up towards this line week after week, month after month. And now we're here, but too much momentum for me to, go ahead in front of the Fed to hear the ice crack. Same with the dollar. Never turned bearish until we started trading in the 98 level. This was a long talked about target all the way through this process. Sometimes you need some distribution. And you know what? This low that we held last week, take a picture, closes under 97.80 are going to be negative. Watch that level. And you know what else you have to watch? In an hour and 12 minutes, one of the best stock traders, stock pickers, commentator, teacher, mentor in the equity arena. Michael Venezia is going to be with you guys. So check Mike out. If you like what we're doing here, hit the like box, subscribe, and more than that, come in and join us. TradeGATEHub.com, free. And we don't have an agenda to sell you a subscription to anything. So good luck this week. I'll be back with Mike tomorrow. We'll talk about the setups going into the Fed. Remember, don't just count your pips, count your blessings. And I'll see you later. I'll see you tomorrow with Michael. Adios.